What up everybody, it's RoyalBluFX here. In today's video, we're going to talk about how to avoid being stomped out in the markets. This is a big topic I want to talk about because a lot of us out there get stomped out in the markets. Also, if you guys need help with your trading and you guys are really struggling, you don't know how to trade and you don't know where the direction of the market is and how to do any of that stuff, please refer to our link in the description below at RoyalBluFX.com to start your membership today. So without blabbering too much, let's get into the video.
Nothing can stop me, I'm all the way up.
Alright, so how do you avoid getting stomped out in the Forex markets? Okay, this is a big question I want to talk about today because whenever we're following our rules in the market, right, and whenever we're looking for the entry, we begin to enter the market and all of a sudden the markets just take us out and we always blame the markets. Oh, it's the markets, you know, I got stomped out, right? Well, that's true to most cases, you know, you do get stomped out or you are taken out of the markets only because you aren't seeing or you aren't looking for any type of confirmation in the market, right? So I'm going to talk to you about how to find the confirmation and then how to obviously avoid getting stomped out even when you find that confirmation in the market, because in rare cases there are times when you have a confirmation in the market and the market actually goes against your confirmation and takes you out and then goes in that intended direction that you're looking to, you know, obviously trade towards, right? So and that confirmation obviously is the choch. That's what I want to talk to you about today. And I don't know if you've ever seen my previous videos, you know, on our channel here, right, about the choch, right? But essentially the choch just changes direction, right? And that's what we're going to talk about right now. All right, so as you see over here, we have two scenarios, one bearish and one bullish. Let's start talking about the bearish scenario here. All right, so when prices are pushing to the upside like this, right, and we and then prices then come all the way here at the high, right, and then we see that prices are respecting a supply zone like this. And then once you see this supply zone being respected, then you get this choch formation, right? And then all of a sudden, when this choch formation happens, we know very well that prices can either retrace all the way at the equilibrium area here, or prices can retrace, have this huge deep retracement all the way here at the 80 to 90% of the way, or sometimes potentially 100% of the way, right? And then our expectation is to wait for prices to either retrace here, right, and then extend to the downside and continue prices lower, or continue all the way up here and then continue prices to the downside like this. So the big scenario here is, since our expectation is to trade from one of these two levels, right, our expectation is to trade these, right? But what if prices actually, when you have this choch formation, right, prices come at the very low like this and start pushing all the way at the high, right? When this happens, what do you do? Right? This is the scenario I'm talking about for any confirmation entry. All right. The more times than not, the choch works effectively, right? And we do love the choch because the choch tells us that it's changing the direction, it's changing character. So we do need to anticipate for that market to for the choch to give us that reversal in the market, right? But what if it doesn't happen, right? So when prices do fully retrace like this, the reason why this is happening isn't because the markets is trying to take you out, right? Even though that's what the title of the video is called, right? But the markets aren't trying to take you out, right? What it's trying to do is essentially, we haven't seen something all the way in the far left of us. There's an order block that price hasn't fully mitigated yet, right? And what it's doing is it's taking liquidity from this high here, right? And then mitigating something all the way at the far left that I don't have here obviously on the markets to show you until we show you on the live chart example, right? And it's fully mitigating it, and then prices that are just fully pushing down to the downside like this, right? And this is where we feel like we were just tricked or whatever, right? Now, how to avoid this, right? Well, essentially, when price gives us that choch, when prices do fully retrace here at either at the 50% equilibrium or at that full retracement zone, supply zone here, right, we need to see another confirmation. We need to see another choch, right? We obviously need to wait for supply to be respected here or at that 50% equilibrium line over here, okay, this zone. All right, and if we don't get that choch, right, if prices are actually just doing something like this where prices are stopping here, right, retracing a bit, then pushing up again, and then retracing a bit, and then coming back up like this. This is a sign for you to understand that, okay, well, we don't have a chock at this level or this level, so we obviously need to wait for that larger time frame, larger major structure to start switching its direction, right? Give us another potential chock like this. Right, so now we know that this move here wasn't really the official chock, because this move here, this retracement that pushed all the way backwards like this, was really just taking liquidity from the lows and pushing prices higher, right? Because there was some sort of effect that was happening here where there was an order block that we couldn't see, or we weren't aware of, right? Whenever we're marking our major supply and demand zones, sometimes we mark our major supply and demand zones, we aren't aware of what's actually happening at that at the far left side, right? And we don't actually think in hindsight, we don't think, oh, that's an order block, we need to mark that one instead of this huge area of supply where prices took off and now it's pushing back like this, right? So that's what I want you guys to see here. So once liquidity is taken out from here, right, it's taken out from this lows, prices are pushing up higher, and then we're looking for prices to still respect the supply zone, right? Now we have this chock, right? We have another chock. The importance of this, now you're probably thinking to yourself, okay, well, how do I know that this chock is real? How do I know that prices should continue to the downside, right? Well, here is the trick, all right? A lot of times in the markets, right, in order to confirm an accurate direction, you need 2 breaks of structures, okay? And what I mean by that is when price is giving you this first chock, right, sometimes it's nice just to have 2 breaks of structures, because this will validate that the markets are in fact pushing to the downside, something like this, okay? So that's what you would need in the markets, right? In chocks are considered early entries in the market only because they have 1 break of structure, right? Only because they are actually in fact tapping that last supply zone all the way over here, and then we get that first change of character. Now that's the first sign, that it's an early sign in the market that prices are indeed actually reversing, right? But in hindsight, sometimes we are unaware of what is actually happening all the way far to the left side, where that order block is unmitigated, right? And then all of a sudden we have, as I mentioned, this liquidity taken out, and now we have that real chock in the markets, right? Also, what's happening here is prices are changing, switching orders, right, from buyers to sellers, and because there was a lot of buying pressure happening here, right, and now all the buyers are switching with sellers, right, and this is where it can get really tricky and really you're unaware of actually what is happening. So in the safe side, for any trader that's trading a chock, right, is to wait for 2 breaks of structures, okay? That may not have been a big surprise to you in terms of what I'm revealing to you, but it is the safest only because internal structure is changing direction, pushing down to the downside, right? We see that this is the major structure, where major supply area where prices have been tapped. Now we need that reversal in the market to continue to the downside. Now we need confirmation that price is indeed wanting to push to the downside, right? And that's why we need those 2 breaks of structures, 1 here, 2nd here, and then the rest is history. Now you can either play the 50% equilibrium, obviously, here, and or the extreme high in this case, right, depending on what this extension is giving us. All right, same thing goes down for the bullish side here of things, right? When prices are bullish, right, we always want that confirmation, guys, because it's very important that sometimes, in rare cases, I'm sorry, that we don't get that confirmation. So what do? Well, we need 2 breaks of structures, as easy as that, right? Once we have that demand tapped, sometimes that first break of structure here isn't willing to have us respect this zone here, right? It's not giving us that full respect, right? So you can look to either take out, excuse me, I don't know why it's not working here. Prices, this is a little bit lagging here. Okay, there we go. Ooh, there we go. All right, and sometimes, like I said, 50% equilibrium isn't respected, and or the full retracement, and then you get this scenario where prices are coming farther in, at a farther deep pullback, and then we notice that price is either taking out liquidity right, the low of this liquidity, then pushing price to the upside, breaking the other upside, this high here, and now we have another choch in the market here and here, right? So the importance of this is really just to wait striking at the 50% or the full deep retracement. Now, when you're obviously looking to trade these chochs, the better performing trades are always the full deep retracements, okay? Because that's where the markets are going to perform better, right? Sometimes if at the 50%, prices can take off and we can target these highs, obviously, but sometimes they don't fully perform better. You know, they don't perform well, right? To push prices to the upside. Sometimes they just, you know, they go at the 50% right here, right? At the 50% like this, and then stop at this high here, all right? Only to find out that we are actually having inducement right there. Let me show you here. This would be inducement and or early sign of liquidity, okay, right there. And then the markets can potentially come all the way down like this, right? Targeting your full retracement extension. Then you're gonna have to wait for a choch here as well now, you know, for prices to push to the upside like that, right? So that's how you can avoid by getting stomped out from these markets, right? Now let's go to the live chart example so I can show you quickly what it looks like on a live chart example. Alrighty, so first things first. Alright, so we're seeing an area where price is bearish here, right? And you can see where we marked out the high and the low of this range here. A lot of you know, can see where when prices are retracing, we're expecting that full retracement extension to the downside. And a lot of you might spot a choch, something like this, right? Where there's a choch here, and then, you know, a high broken and then a low broken like this. Then prices, we're expecting for prices to retrace all the way back to this high here, and then we're looking for that sell immediately here, right? Some of you may have a sell stop here, right? And then all of a sudden prices come and take you in, right? And then you lose this trade, right? Well, this is the situation that we're talking about. So now that prices are going up a little higher, we can't specifically see what is in this wick entirely, right? But there is an order block that we can't see to the human eye at this point. And what we should expect, though, obviously, is when prices are extending to the upside, is to expect that prices are taking out this high's liquidity here, is mitigating something here at this high here, and now we're looking for prices to exchange orders to push prices to the downside. Now, you can catch an earlier trade, right, an earlier entry here, where we see there's a choch here, right, and this is where you could have looked to sell from this high here, right here. But our rule of thumb is when something like this happens, we're looking for two breaks of structures, not just one, right? So we see that there's one break of structure here, and then you can see that there's a second one, second one right there, okay, right there. So now we had one break of structure, two break of structure, prices retrace all the way up, and now this is where you could look for that sell-off from here, right, at this high, like that, right? And then obviously you need to stay in and trust in the process. The prices should take you all the way down like this, right? So that's why it's important to have two breaks of structures whenever you're dealing with a scenario like this, right? We can look for other scenarios here. Let's look over here, for example, where prices are fully retracing. Okay, you can see that prices tested this high, the supply here. Now you can see obviously here, a lot of you that know that this is your major supply zone here. This is your current high and your current low. There are times when prices do test that 50% equilibrium like this, okay, right here, and then you're looking to sell it off from that 50% equilibrium. But in fact, prices are, again, stomping you out, pushing prices higher, and then going up somewhere here at the extreme high to look for that sell-off, right? So you might look to say, okay, I want to sell it here because I do see a choch now here, and then I'd also see another choch right there. So it just makes sense that RoyalBluFX told us that this is where the sell-off is going to happen, right? We get tapped in, and then we're expecting for prices to either hit this low here or expect that low to be targeted here as well, right? Because it's our major low, our major high or major low, major high, major low right there, right? And then again, you get stomped out, right? But what if we have those two breaks of structures, right? Let's look at here. We have one, sorry, this is not a break of structure, this is just a choch. Let's talk about the breaks of structure. There's the first break of structure is here. The second one is here. Okay. Let's go all the way back here. And now we notice that there is a retracement happening at this area here, that it is targeting this order block, and this is where your entry would have been for a safe target to the downside like this. Let's do this. My computer's lagging a little bit here. All right, something like this and something like that. Target this low, and there you go. Right, so it just makes sense. All right, let's go look at a few other scenarios here. If my laptop actually works, because it's really lagging right now for some odd reason. Okay, let's go back here. Okay. All right, so in rare cases, sometimes prices do mitigate your 50% equilibrium and then take off from there. You can see if we do the we go from this low to this high, you can see that it's touching that 50%, and it's just mitigating something in here, which we can actually see right there. So this would be something out of the question, obviously out of the question of this video. You can see right there it's touching that 50% and pushing prices to the upside, right? And at times, like I said, 50% equilibrium does perform well. It does push to the upside, right? But in rare cases too, right? You can say to yourself, I want to be that trader who just wants to trade full retracements, full deep retracements, and that's it, right? Let's look at this example here. Prices are pushing upwards. Prices have broken structure here, okay? Right there, and then we obviously now need to take in consideration that we have both of the 50% equilibrium or that extreme low, right? Here's that area here where a lot of people would have looked to buy because there is that 50% equilibrium. Let's take that from that low to that high. You can see there prices are being tapped at the 50%, and there are people that actually bought up there, right? And now people are like, well, I just got stomped out. Well, let's look at it again. Okay, when prices are starting to give us that choch, and notice here we don't even have a choch. I mean, on lower time frames we do, probably on a 30 minute or 15 minute or 5 minute, but there is a choch here. Actually, you can see it right here. Let me zoom in here. There's a choch here, right there, right? So we have that low broken and that high broken, and there's people here waiting to buy, right? And price fails and goes to the downside, right? So once that happens, what do? Well, now we need to sit patient and wait till see for prices to target our extreme low, right? And now let's wait for that choch. Let's look for that choch, either the choch or the two breaks of structures. Okay, our choch begins from this low, from this high, right? Now let's look over here. We have one, okay, two breaks of structures right there. Okay, so once we see that two breaks of structures, we can look to enter right there. Right? See how easy that is, right? We're confirming that the direction has to move back upwards, okay? We're not just depending on one break of structure, because one break of structure can hurt us in the market. That choch can hurt us eventually if we don't know and utilize it correctly in the markets, okay? Let's look for another scenario here. Probably the last one over here. All right, we have a clean break of structure. Is this even complied with what we're doing here? No, it doesn't. Okay, we can continue forward here. Okay, this does not here. This looks perfect. It's a full deep retracement. You can see that we have that low to that high here. All right, we have it below that 50% equilibrium. You see that there's a lot of demand pushing from this area where supply failed and the demand took over. Okay, let's look over here. All right, right here. We have a clean break of structure, right? And then our expectation is to wait for prices to retrace to the next higher, lower high, right? We have a high, lower low, lower high, lower low, lower high, lower low, lower high. So this would be an area where we expect for prices to come and look to sell off from, right? Eventually, if you were to have your risk like this, right? Something like this, you would have been stomped out immediately, and obviously prices go towards your intended direction. But let's look for two breaks of structures. Right here, we can clearly see that there are two breaks of structures. We see one there, okay? If you go on the lower time frames, you can see that that is a break of structure because there's a full body candle closing below this low. okay, then there's 2 right there, right? Now after 2 breaks of structures, we know that price is confirming to push to the downside. What do you see right over here? You could look to target this high here, obviously, and then look to have your risk according to that zone there, and there we go, right? So you would have had a nice TP like this. So anyway, guys, thank you so much for watching this video. I hope you love it, and please let me know if there's any questions you guys have in regards to this video or in regards to any other videos that we have out there. I will be looking to respond to all of you guys. We love you. Stay safe, and we'll see you in the next video.
Nothing can stop me. I'm all the way up. All the way up.